The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the May 28th wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. My outcome as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. So let's begin our day with empowering beliefs, what I call change our mind, and we'll change our life. You know, oftentimes you and I, we underestimate the giant capacity that we can immediately command when we focus all of our resources on mastering a single area of our lives. And for those of us that don't achieve what we truly want, the main culprit, is that we never direct our focus. We never concentrate our true power. It's as if we become a dabbler, never deciding to master anything in particular. And when it comes to trading and investing, dabbling just won't do. You see, just like life, it's all about mastery, and that means immersion. It means that we have to learn how to master time. You see, once we master time, what you and I then realize is that oftentimes we overestimate what we can accomplish in a year, and we underestimate what we can achieve in a decade. What's that mean? That means don't give up, folks. Don't give up. At times it might seem like we are not making any progress, or a time period when we might get confused. Heck, listening to the show, you might get confused as I talk about different patterns out there. But what we must recognize is that confusion means one thing and one thing only. It means we're about to learn something. Think of it like this. The seed gets planted into the ground, and on its way up, it hits the crust of the surface of the earth. How easy do you think it is for that little seedling to bust through? Exactly. You see, most of the seedlings hit the crust, they get confused, and they never break through. Yes, they give up. But here's the key. Success comes from taking initiative. Success comes from being persistent and from making sure that we express the real depth of our conviction with every action that we take. And we must always remember this. We must always remember that when we get to that level of confusion, you know, and that is just before you and I, it's just before we're about to break through. You see, it's the universe testing us. It's the universe's way of testing our conviction or testing our, level of persistence. And it's going to say to us, the universe that is, show me just how bad you really want this outcome. The real question, folks, is what simple action could we take right now, right here, right now, to produce a new momentum towards some area of success in our life? Are you trying to become a better trader or a better technician? What is it you really want? Look, this much I know to be true. This much you know to be true. The path to success, it's to take massive determined action, because there's no abiding success without commitment. If you want to be successful, here's the formula. It doesn't get any simpler than this. Find someone who's achieved the results you want and copy what they do, and you'll achieve those same results. The time, folks, it's now to master anything it is that you want in life. And always remember, life is nothing more than a mirror, and life reflects back to us that which we think. And always remember as well, what we want to do is turn your mirrors into windows. That means you want to look in the mirror. You want to see the person you want to become. Yes, the person you want to become. And I say that because no matter what level of success you're at, you're always striving for more. We're always improving. And then what you do is take massive determined action, jump through that mirror, turn it into a window, and then it'll become Wonderful Wednesday. It is Wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. We've got the Dow trading off 50 points right now. She's trading out at 16,624. S&P down 3 points, trading out at 1909. NASDAQ off 13 points, trading out at 4223. Russell 2000 off 7 points, trading at 1134. NASDAQ 100 off 8 points, trading at 3714. NYSE, New York Stock Exchange, trading off 30 points, trading out at 10690. Net decline in issues only only 466, needs 1,263 or more net declining issues today in order for the bears to take control of the marketplace out there. As we speak right now, that is not the case. Let's go check in on some of our shorter-term charts out here. Let's start off the day by taking a look at the 120-minute time frame for what is arguably the strong hands in the market right now, and that is the NASDAQ. Now, the NASDAQ here this morning made one of your favorite trading patterns, made one of my favorite trading patterns that was giving us that little forecast that, hey, we might see some storms form today, and that was a price relative strength divergent pattern. That began out here at 4 o'clock yesterday afternoon as the NASDAQ closed up at its highs out there. It really began to form. The first time that it formed, first time that it began to have an inkling of forming, that took place at 4 o'clock this morning. But then it formed a little bear sash, a little bearish engulfing candle out there. But now, coming in at the between 4 and 6 a.m., that was at 4 a.m. is when we finally got that candle. And then in that next 120-minute, next 2-hour session, the market said, nah, I don't think so, not yet. However, there was a little dark cloud cover that formed here as we came on the air at 8 o'clock. And then at 10 o'clock, going into the 10 o'clock closeout here, we had some little follow through to the downside out there. That's signaling to us we're going to see just how weak the market is, or just how strong the market is. You've got a little bit of a reversal pattern. You've got something that is confirmed out there. If we take a look at, hey, where should price pull back to? Let's go and take a look at the 120-minute time frame here for the NASDAQ futures. We're going to go ahead and I'll give you a couple of different areas to focus on. I use multiple charting tools and systems out here, so we're going to do it all when we take a look at the NASDAQ futures for you. So if we take a look at, let me just go ahead and clean this up. I don't know if I want to really have to get rid of all this stuff, but I won't. In fact, let's just take a look at let me think, where do I really want to come to begin this retracement? I'm going to take the retracement off of the time frame right back here, 12 noon on May the 15th. So we're going to go back in time. We're going to go from the May 15th low, because that's really the last most significant low out there, to the high that came out here early this morning. The dead cat bounce is 36.57 out here. So, hey, that'll seem like quite a move out there if, in fact, that's what takes place. Now, that's a dead cat bounce. That's a .382 retracement out there at 36.57. You're at 37.15 right now. If I get even more conservative, which I'll do, if we take a look at the time frame of about 2 o'clock in the afternoon on May 20th, we use that low, which is a price level of 35.84. Whoops, I didn't mean to do that. I meant to grab the actual tool out here. We go from that low up to the high out here. Again, that took place at 8 o'clock this morning. The dead cat bounce is 36.74. Let me change colors on that one. That would be a little bit nicer, wouldn't it? Especially for those of you who have fallen along at home with us. So the dead cat bounce .382, 36.74. So 36.74, 36.57, if that's all that the market is able to dole out. Hey, let's face it, if it doesn't get down there, especially coming from this extreme overbought condition out there, let me tell you, folks, that says a hugely strong market out here. And at the highs that we're making, it's an initiation move. It's the beginning of a big summer rally out there. That's the message that it most certainly would be communicating to me. If I take a look at the 120-minute time frame chart using the TAS signal boxes, the market profiles out here, I've got cores on here. That is clearly not what we're looking at. We want to take a look at the NQ right now. So let's go take a look at the 120-minute time frame out here. Let's pull that back. It is right now just bumping up against what's referred to as the unfair high. So it's up against its first potential level of support out here, which is 37.0563. Right now it's trading at 37.06. If that level fails, it says it ought to find support down around a 36.85 type range out here. That is what the 120-minute time frame is showing us. We can switch over. Let's take a look at the 240-minute time frame. John Logan likes to look at the 4-hour chart out here. So we'll take a look at that. 4-hour chart now is below the unfair low. It doesn't necessarily mean that you would be short here, but it says that probably next area of support in this case would be that 3670-ish type range out here. Let's go switch over and let's take a look at a daily chart. So I'm giving as I'm rattling off these numbers for you. Hopefully you're writing them down. A long way down to get to the so-called unfair high area inside the daily chart for the Nasdaq. That's how strong this is. And if you're watching us on Tiger TV, you're seeing a couple of different A to B equals CD patterns to the upside that have formed out here. 3617 would be the number there on the daily chart. Before it would even on the daily chart even consider trying to take some kind of short position in the market. That's quite a ways down here, 3706 right now, so it's nearly 90 points inside of the Nasdaq out here. So nice strong move. We should expect some type of retracement out here. Of course, the Euro Japanese yen, I covered that in great length, great detail this morning during the 9 o'clock show. If you're just tuning in now, you can go catch the archive of that show on Channel 9, just like the archive of this show is on Channel 10 out there. Let's go check in on, let's do this for multiple time frames for multiple instruments. Let's go back and take a look at, let me put the 120-minute time frame up on my chart out here. Now, let me do this here. Didn't mean to do that, but I did mean to do this. I want to reload this. Okay, now still don't have what I'm looking for out here. Let me go take a look at, now the ES Mini has not formed, I don't believe that did, has not formed a price relative strength divergent top out here. Does it have to? No. But you'd like to see some kind of uniformity. Is that a word out there, uniformity? It is right now. If Stevie said it, it's got to be a word out there. But we do have a little evening star formation that had confirmed out here at 10 o'clock this morning as we were coming on the air to do this show. That's a minimum of a 3-candle formation out there. That is a bearish reversal signal nonetheless. Let's go take a look at where the ES Mini could trade down into. So let's go put this chart back up on the screen. Let's go take a look at just normal retracement areas. Excuse me. A normal retracement area. Boy, this chart's got a bunch of stuff on it, doesn't it? Let me try to delete some of it. Make it a little bit easier to look at. Otherwise, it gets even too confusing for you, for me. Okay, we're going to come in. We're going to take a look at, I'm going to take a look at the swing point, normal retracement off of the low out here at the 4 p.m. open, which was at 1864.75. That's the ES Mini we're looking at. I'm going to go from that up to the high that took place out here this morning at 8 a.m. Dead cat bounce 1895. You're at 1906 right now, so that's another 10 points down. It would be nothing for it to pull back to the 0.618 retracement level. Again, it's got to work off that bloated, overbought condition that it was trading in, just as all of them are. That's why you don't like to really chase a market here. When things get into a overbought or oversold zone, you like to see where that first pullback pulls back to, whether it's on the way down, where's it pulling up to, or on the way down, where's it pulling back to. So the levels that you want to really be paying attention to, 1895 right now, I would say is a range. 1883 would be your next target area inside of the ES Mini. And if we see that kind of pullback, man, people are going to start saying that the sky is falling. That's it. That it was the big one, Elizabeth. I think that's what they used to say in Sanford and Sons, wasn't it? I don't think so. I think it's a buying opportunity, not a selling opportunity. 877-927-6648. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait, sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We've got the Dow's trading off 44 points right now. S&P is down 3. Composite is off 13. Russell's off 8 points. And let's go start checking in on some of the indexes. I've got the Rhodes Momentum Indicator charts up on my screen here. The upper portion is the weekly chart. The bottom portion is the daily chart. Now, the reason for doing that is, in one quick snap of a finger out here, we can take a look at multiple time frames. So this is not so much for the intraday trader, though the intraday trader wants to understand what's going on these time frames for sure. But with regard to more swing traders or what's going on wise, it's important to be able to understand what's going on up above you as well as below you. In this case here, as we take a look at the weekly chart for the SPY, what we know so far this week is that the resistance area, which was created by this little shooting star candle, this formed the week of April the 7th. The high of that session, by the way, 1897.28. You're at 1909.37. As long as the S&P closes above that this week, that is bullish. That's old resistance should become new support out there. Does it have to close above it? No, it doesn't have to. If it doesn't close above it, does it mean we've got a failure out there? Not particularly. Could be, but not particularly out here. The trend is still to the upside. It's in the strong bullish mode out here, both on the daily and the weekly. Why do I say that? Well, I take this little light blue areas. That's what I create as the strong baby blue out there. Baby blue eyes. That is the strong bull mode message out here. Good support inside of the S&P. Right now, the 50-day exponential moving average is priced at 1872.67. Any pullback into that area should find support at the 50-day. That's on the S&P 500. Let's go take a look at the Russell 2000. Let's go see what it is doing on the weekly as well as the daily time frames out here. Now, the Russell 2000, you can see on the weekly, you can see the damage that has been done. Last week formed a nice bullish engulfing candle. Right now, today, it's trading out at 1134.40. It's trying to find some legs out here. What the Russell did yesterday was it actually got up above its 50-day exponential moving average. Remember, it had traded below the 200 out there. It formed a little hammer candle on May 16th, formed a nice confirming little bullish engulfing candle the very next trading session on May 19th. It was a bullish engulfing session that was more important than that hammer. The reason why is because there was a gap in between the session of when that hammer candle formed, and so although technically it was a hammer, Stevie kind of discounts that when there's a gap involved. Nonetheless, what price did yesterday was it got above the 50-day exponential moving average out there, so the daily definitely improving out here. The weekly is doing its best to improve, and I do believe we're going to see more of a retracement inside of the Russell 2000, more of a retracement to the upside. That's the week indice out here, or one of the week indices, certainly with regard to the demolition that was done to the downside. We go take a look at the NASDAQ composite out here. NASDAQ composite on a weekly and a daily time frame. It's trading out at 42.27 right now. It is off the bottom. It's actually got a nice little weekly bullish crossover. We haven't seen that weekly bullish crossover. That's of some moving averages. Last time we saw that was all the way back in the time frame of January of 2013. So you got to go back a ways out there. That turned out to be a nice little buying opportunity. Right now we can see that the composite, or I can see the composite here, has moved into the strong bull mode camp. That's kind of interesting. So after coming off the bottoms out here, the sellers or the buyers are back in control of the NASDAQ composite. That is nice long-term bullish out here. Yes, a summer rally. That summer rally, in my opinion, is not over. We've got higher prices to come still. Just seeing a nice little work off of an bought condition out here. I'd like to see the market pull back even further. Come on. You got more than 39 points to the downside, Mr. and Mrs. Dow. Please pull back even more out there. That's what we want to see, is more of a pullback. If we go take a look at the Dow, in fact, let's go take a look at the Dow Jones Industrials. Let's go see what it's doing out here. We'll take a look at the transports also. And for Mitch, I will take a look at IBM here shortly. If we take a look at the Dow Jones Industrial, it's got a bit of resistance that it needs to try to clear. It also had that little shooting star candle on April the 4th. The high of that candle session is resistance, and that is a price level of 16,631 and a little bit of change. It's over right now as we speak. Okay, so that's good. So it's up and above that area. It also has a little bearish engulfing candle that took place a couple weeks ago, May 19th. That high is 16,735 out there. Nonetheless, the Dow, even though it's somewhat weak in that it hasn't made new highs like the NYSE has, like the S&P has, when you really take a look at it on the chart, it's really not that bad. Very little damage. We saw price move down into the 50-day exponential moving average. It did that the trading session May 21st. The very next trading session says, no, I don't think so. Although I can't do that like Bill Murray did. Was it Bill Murray who did that, or was it Chevy Chase? It was Chevy Chase in that wonderful golf movie. What was the name of that movie out there? Oh, come on. Well, I can't remember, but you probably know what I'm trying to say. It's on the tip of my tongue. 877-927-6648. Caddyshack. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
I'm alright, nobody but about me. Why you got to give me a fight? Can't you just let it be? I'm alright, don't nobody but about me.
You gotta love the support we've got in our back room. That was Al. We were talking about her on the tip of my tongue was that great movie Caddyshack out there. I mean, what a great cast of characters were inside of that movie. Most folks have seen it out there, especially if you are a golfer. But even if you're not, you had Chevy Chase in there. You had Rodney Dangerfield. He played like a great character. You had the guy from Gilligan's Island, right? Speaking of islands or island reversals out there, take a look at Ted Knight. Ted Knight was his name out there. Bill Murray was in that movie. What a great movie. A lot of that movie, I believe, was filmed in Florida. I know the pool scene, because I used to have stores down in South Florida in the Plantation area. I know that the pool scene was filmed down at the Plantation Country Club, and I know there was that boat scene was down in Key Biscayne or somewhere down in Miami out there. So I know that I don't know which golf course that was at, though. I don't recall the actual golf course where they shot that movie. In any event, you didn't want me to talk about Caddyshack, but thank you, Al, for going ahead and queuing that up. Now, I had a request. We'll go back to the indexes. I had a request to take a look at the IBM out here. Now, if we take a look at IBM, the weekly chart again is on the top portion of my screen. The daily chart is on the bottom portion. And then on the bottom portion here, you're going to see these little green boxes. Those green boxes tell you really who's in control. This is part of the Rhodes Momentum Indicator strategy. When you see a green box actually telling you that sellers are in control, maybe I should have reversed that in retrospect, but I'm not going to go back and change it all. It's all programmed in right now. The red candles are telling you that buyers in control. So there's no question right now on the daily charts out here. IBM is really in the colored red area of my red zone. That is in the sell zone. That is not in the buy zone. It's telling you that sellers are in control. The price of below the 50 and the 200-day exponential moving average. It's if it continues this kind of behavior, it's going to be shed out. It's going to be sent out to the woodshed out here because we're going to see a death cross inside of IBM with the 50-day cross into 200. We're not there yet, but geez. It is close out here, and that is inside IBM. The key area probably to be watching on any pullback is going to be this hammer candle that formed the week of February the 10th out here. The low of that session is 172.19. The high is 177.56. It says that area ought to hold as support, and if it doesn't, that is a bad scene for IBM out here. You can see the weekly chart out here. If you go back into the time period of June of 2013, IBM has been in a world of hurt on the move down. So the bulls are trying to take control. We'll see what they can do. There's some selling pressure on there. Maybe if there's a more specific question, I don't recall who asked me inside the den itself what they're looking for. Maybe just type something in there, we can go take a look at it. But sellers most certainly in control of IBM. And let's go take a look at the Let's take a look at the SOX index. Often left behind and most certainly should not be left behind. The SOX index here, wow, long and strong out here. Take a look at this. Now, this market is not going to cascade to the, lower without the semiconductor index, dragging the markets lower. Take a look at this pretty interesting chart, actually. We ought to look at the semiconductor index a little bit more often. But if you're if you're watching this on Tiger TV, you see nothing but clear blue skies. That's why I use that little light blue there, because clear blue skies, that is as bullish as you possibly can get. And the SOX index has been in clear blue sky zone since September of 2013. Yeah, along the way, we've seen a couple of bearish candles out there. They've proven to be nothing more than the intermediate forms of some kind of resistance out here. But boy, the weekly chart tells the story out here. Actually, if you even take it back further, look, coming into a yellow zone out here inside these SOX, that's not such a bad thing. It just means, take your foot off the gas pedal, that's all. So if you really go back and you discount the yellow lights out here, the semiconductor index since January of 2013 has been in clear blue sky sailing water out there. That is strong. That's not so strong. That is super strong out there. So the SOX index looks pretty darn good. On a weekly basis, it's dealing with a shooting star candle. That was also the week of April the 4th out there. So kind of uniformity amongst weekly candle sessions out here. The high is 601.40. You're trading at 596 and a little bit of change out there. So getting above that would be also extremely bullish. Not that it's not bullish right now, because it most certainly is. That's on the semiconductor index. Let's take a look at the transports. Let's go see what the transports are doing out here. See what the trannies are doing. Transports. Take a look at that. Remember, we just looked at the SOX index. Take a look at the transports. the transports also from a super strong bullish mode. They go back to January of 2013 as well. A couple little bit of yellow flashes of caution along the way, but nothing that lasted too long and nothing that turned out to be anything more than just a little bit of a resting period. So the transports out here just absolutely on fire. They're trading out at 80, 61, 53. They're up actually at the, even with the market trading just a tad lower, you've got the trannies out here up at the all-time highs. Session high right now out here. That's not typical of a market that's going to start to crater or anything out there, at least not that I'm familiar with. So the trannies are saying, yeah, and that's why I'm saying, pull back. Come on, do some more damage. Give us a nice retracement. Get all the bulls scared and get all the bears happy out here. That's really what we want to see, because these markets, they want to scream higher for a nice summertime rally. Not that we haven't had a bad rally over the past 4 or 5 trading sessions, but there is more to come out there. If we take a look at the New York Stock Exchange, I mentioned Thurston Howell III from Gilligan's Island. They were stranded on that island. That's what those island reversal candle signals typically form. That's what we had forming on the daily chart out here. And using this tool, it's not as easy to see, but let's do this. Let me switch over to the other chart. Let me switch over to the Ensign Windows tool. Let me pull up the, as soon as I can find where I put it. It's right here. There we go. As long as I can. So you had a nice little island reversal candle. This is where we stranded passengers. That took place between the trading sessions May 12th, May 13th, May 14th out here. A nice island that was formed, and everybody was rescued, totally rescued here yesterday. Now, price did not close above the high of that May 13th level, which is 10,725.09, but it will. Just give it some chance out here. New York Stock Exchange is really, really, really strong. If you take a look at the advanced decline line, I don't know that I got it on this system here. I've been changing over to different computers. Let me see if I've actually got that tool on my screen. Give me a moment here to do that. This is going to be a, where would I put it? Just a little bit of a strategic pause. No, I put it underneath the C drive. So give me a moment here, see if I can find that. I wanted to show you now I don't have it updated through yesterday on my screen because it's on a different computer system. Let me see if I've got that advanced decline line anywhere. And, of course, the answer is no. I found out where I would have likely put it, but it's not there. What I can tell you is there's no indication whatsoever inside the NYSE that that this market should not continue to just simply careen higher out there. And, I made this point yesterday, and I made the point to my newsletter subscribers, I think, on Thursday or Friday last week, and that's this. And when you take what is considered to be one of the most bearish reversal signals out there, and arguably the island top, the island bottom fits that category, when those fail, and they fail quickly, there's nothing more bullish than a failed bearish pattern out there. There's nothing more bearish than a failed bullish pattern out there. That's why those 0.786 Gartley buys or sells, when they actually confirm, when they actually work out there, that's why they turn into butterflies. That, in essence, is really the same strategy behind that thinking with regard to what the market wants to do out there. In fact, let's go take a look at the ETF structures out here. That's the reason why I created the Rhodes Momentum Indicator system, was because what I recognized in doing testing out here. Let me put, we're going to go a little bit back and forth. Let me do this. Let me put the SPY out on the screen out here. And actually, what I might do is just switch over to the daily. Well, no, that's good. It's good to have it. It's good to have it like this as well. The reason is that in doing testing, what I recognize that every market, every stock, everything that you look at basically has 4 core elements, like a quad core system or something like that out there, with volume only being one of those cores. Now, volume is real key. When you're trading any stock chart or what have you, want to take a look at where those high volume bars are, because if they're at the upside, tells you that the market isn't over, that it eventually wants to get up there. If it's to the downside, it tells you that real bad news, that's the area where you're going to likely find support. But what I recognized was that it was really only one of the 4 elements of what price is really trying to do. That there are 3 other elements inside a stock chart that and that help you to understand what's going on inside price. That's why there's so many. If you've ever opened up a charting package, you'll see all kinds of indicators that are available, all kinds of tools. And what they do is each of those tools will measure one of those 4 core areas. Now, I've broken those 4 core areas down into momentum and speed, what I like to call velocity. And momentum and speed, that's what that relative strength indicator. It's why I say, and the relative strength indicator, that's one tool. Stochastic is another. It's like about a series of like 19 popular tools that in essence track the same thing. I say become good at one of them. If you like the stochastics and crossovers, that's what you should become an expert at. You should absolutely master that before you try to use another tool that also is in essence doing the same thing. The correlation between the stochastics and the relative strength indicator is 80%. So if you were going to focus a lot of your time on both of those, you're focusing your time when most of us don't have enough of it, and really the wrong place, because what you ought to do is you ought to spend time trying to focus your time on what I'll call the energy or the angle, the energy angle, the verticality. I don't know if that's even a word out there, but the verticality of a market. Now, there's some great tools. I think one of the best tools out there is the power law vector indicator, or I like the A to B equals CD to maintaining the same C to D angle as the A to B leg out there. But you want to be able to measure the verticality. So then you've got volume, and then you've got volatility. You've got liquidity out there. There's a number of gauges. Those are the 4 areas of any stock chart. Now, what I did here, what I accomplished with inside the Rhodes Momentum Indicator strategy was being able to take a look at a chart and be able to put all 4 of those elements really into what's going on inside of the market out here. So here's the SPYs. You got the weekly at the top. You've got the daily at the bottom. Now, those, as I mentioned before, the red signals, the red little boxes out here, they tell you truly who's in control, whether it's daily, weekly, intraday, time frame, whatever it is that we're going to take a look at. And what this is telling us on a weekly chart, and take a look at the SPYs, that it is the buyers that are in control. This week here, we're forming one of those nice red candle signals. If we take a look at the daily chart here on the bottom portion of the screen, last 3 indicators that were formed, all of these red signals out here. Now, this system is not intended to sell the top tick or buy the bottom tick, because really it's all about the trend. The trend truly is your friend, and it's about being able to establish what's going on from a trending-based standpoint. And inside the SPYs here right now, the SPYs are dealing with this little shooting star. In fact, they're above the shooting star. So from March, this is the week of March 21st out here, it formed a shooting star. That would really be your resistance, which should become new support, 189.02. You're at 191.11 right now. So a nice, strong move that is underway inside of the SPY out here. If we take a look at the QQQ, let's go take a look at that. Now, we'll go back and we'll take a look at volume out there as well. So I'll switch over to a different chart. It's easier to display volume on either e-signal charts or my Ensign Windows chart out here. As far as the Qs, what are they dealing with from a candlestick standpoint? They are dealing with the high of this little bear sash reversal candle from March the 14th as well. That is at a price level of 91.06. You're at 90.69. So far today, the inter-session high looks like it's been 91.02. So a close today above 91.06 would be extremely bullish. That's a weekly chart, by the way, that we're taking a look at. But it's a changing. It's a trend out here back to the bullish side on the weekly. It is most certainly in the bullish side on the daily chart, and the Qs just simply want higher price. What is it that we're seeing here in the market with red, a little bit of a pullback out here? What we are seeing is nothing more than a market that on an intraday basis is working off an bought condition out there, and that's just simply using the 120-minute time frame. This happens to be the S&P futures out here, and above the black line, above the 70 line out here, is where price gets into the bought zone out here. And so just working that condition off, and it's doing a nice job of working that condition off. We go take a look at volumes inside of the marketplace. Let's go do that inside the ETF structures out here. Let's go back and take a look at the Qs. The Qs yesterday. Now, the Qs here, and one of the most unique aspects of the Qs is that the Qs make lows with high volume. And what they make highs with, this one's not so unusual. What they make highs with, though, is with light volume. Low volume, high volume lows. That's what the Qs make out here. And they made 4 in a row, although they were higher lows out there. And that was certainly an indication that the market wanted to move higher. The Qs, they want to move up to 91.58. They're trading out at 90.73 right now. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Masters Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's trading off 41 points right now. She's trading out at 16,634. S&P is off 3.5 points, trading at 1908. Composite off 18 points. Trading out at 42.19. Now, Goldilocks and silver. Gold's trading off $6 this morning, trading down at 12.59. I saw a little bit of chatter inside of the den. Our man Z asking, where's gold headed to out here? Now, gold, when I put up my chart, I've got a monthly chart of gold on my screen out here. And the monthly chart shows that even though we've seen a nice move off of the lows back here in January of 2000, let me do this. Let me move this up to the top, and I'll pull it back down. There we go. I'm just going to do it like this. I can just reverse it, I suppose. So you can see here, as gold was coming off of the lows out here, on a monthly chart, all that price was able to do was not able to really break the trend that is still in place out here. And that's a descending price channel. It's a continuous contract that we're looking at on my screen. This takes us all the way back to the price highs back in October 2012 at that 1797, 1800-ish type level out here. And it's a nice descending price channel. And what happened during the month of March here? We saw gold, try to break through that price channel. Tried to break through it. It found resistance, closed back below it. And what gold does, it doesn't do it every single cycle period, but it does it pretty darn good. And that's gold will trade on makes a typically significant swing point every 13 and a half months or so. And so I would suggest at this stage here that we're looking at is a swing point low that gold ought to be putting in. Now, up above the screen out here, what I've got the cycle periods. I'm just trying to line. Now, I don't have a way to make 13 and a half months, unfortunately. So I can only do 13, and so you've got to just kind of move a little bit. So the cycle out here is 13 and a half month cycle. Let me see if I can try to line things up as best I can. This is about as good as I can line things up here as we speak right now. If we take a look at the time period back here in July of 2013, it made a cycle high. If we take a look back here in August of 2013, it made a cycle high. If we take a look at the September 2013, September 2013, wait a minute here. This monthly chart is not accurate. I apologize. I don't know why I didn't pull the date out here. I'll tell you what, I'll try to get this chart updated. We'll come back to it tomorrow, and we'll take a look at that 13-and-a-half-month cycle out there. What I can tell you, and I'm not going to go update it, is that we should see a cycle low coming in the middle of June out here. That's when the next 13-and-a-half-month cycle would be. Now, based on just simply going from, I can do this at least, basically going from the low of December of 2013 all the way up to the high that was put in, what we're going to see is that prices right now just traveling just below the 0.618 retracement number, which would be 1262. We're trading at 1258. It's possible this area holds, but yesterday we saw a break of a swing point with volume, accelerated volume, and what that says is that we're likely to see a pullback maybe into that 1226-ish area, the 0.786 retracement. Now, on a monthly basis here, December 31st, you've got gold trading into the top of that swing point, which is at 1267.50 out there. So, it's likely what we're going to see here is a cycle low come in the next couple of weeks. Now, at the 1226 level, price will get into the June area, the June 2013 area. But it looks to me more likely than not that's what's going on inside of Goldilocks. And trading at 1258, probably headed to the 1226-ish range. Folks, it is Wonderful Wednesday. That means we got our man Basil Chapman in the on-deck circle. Then we got Larry Pesavento, Daryl Martin, David White, the Tom O'Brien Show from 4 to 6. Have a great Wednesday, folks. Look forward to seeing you soon.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.